All right, welcome everyone to episode 2 of the overnight sessions. You already know I am a shameless walking advertisement for Nike. I got the Noctas on. You guys can hate me in the comments for wearing Noctas if you want. But you already know I got I don't know if y'all can see. I guess it's a little hard, but I got the jacket on. It's Burberry shades. I don't have any Nike shades yet, but I am working on that. I just recently, we'll get to it later in the video, but I just recently purchased the Maduro fit that went viral on social media and media in general. Uh, I don't want to get too political, but when I saw that Nike tech on TV, I'm not gonna lie, I just had to cop. So I did spend almost, $250 on that Nike tech that Maduro copped. But I am working on the Nike shades, guys. All right, I am working on that. But I am rocking the Robin Hood cap, market cap. So we're ready to rock and roll on episode 2 of the overnight sessions. Let's see. So we're gonna start off with just a little bit of overview, I guess, of some charts. I don't think I'm gonna react to a video today like the last one. I'm pretty sure I fixed the audio issues, right? So episode 1, kind of off to a bad start. The audio quality was not the best, which is a shame because I think a lot of people were turned off from it. I mean, I only had like 2 people watch it anyways, but I think it would have been a lot better if the audio was better because I think the content was important. Getting a different perspective on Nike. The perspective of a YouTuber that is in the fashion industry rather than finance and looking at Nike, in terms of numbers and charts. But if we take a look at SPY right now, we are in this period of consolidation. I'm not too familiar with Robinhood, but I am going to try to use it for this video. So, just a little period of consolidation. I'm not getting too crazy with drawings and all that cool stuff, but it looks like we are looking for a breakout. So we could be seeing a good start to 2026. But keep in mind, there is this gap right here that I've been eyeing for a long time now, right? A gap all the way down to 575 for SPY. And even though that looks pretty steep, keep in mind that is honestly not really anything, it's just a 10% drop is almost $69, right? So that would bring it down almost to, like the 200 day, right? A little bit below the 200 day. So a 10% drop would be halfway there, right? Almost to that gap. So it's just something to keep in mind, guys. If we enter another bear market, we go down 20, 25, 30%, could easily fill that gap. QQQ, the same thing. If Robinhood would load, there is this gap right here. We could be seeing 500 for QQQ, sometime in the future, possibly. I don't want to make a trade on Robinhood just yet. But today we were off to a good start, 6% after the big news over the weekend. I had to do a little double take, make sure my mic was working this time. But it is, so we're rocking and rolling. Ethereum also has been consolidating for a long time, as you guys can see right here. Nice period of consolidation. He's trying to make this a little bit more pleasant to look at. So it is below the 200 daily, I believe. Yeah, that's the daily. But it is consolidating. And I think this whole situation in Venezuela, whether you agree with it or not, this isn't a political channel. And I don't want to give a political take because I just don't really know a whole lot or care to know a whole lot about politics. But I think if you look at it objectively, this is a good thing for crypto and fintech, because now if we are friendly with Venezuela, then that means the people, right? I'm sure they already have been using stable coins and whatnot, but now they're going to be incentivized even more to use it because companies like Robinhood, PayPal, the doors are open now, right? Coinbase, I think Circle is one. I'm not too familiar with Circle yet, but it is a one stock that I am taking a look at, keeping my eye on. and we'll get to that in just a bit. Solana as well. You know, the period of consolidation. I mean, gold and silver have been ripping like crazy. So I touched on gold and silver, mostly silver in the last video, so I don't want to talk too much about it. You know, it did correct a little bit, but now it's going right back up. You know, not much to say about silver. If we look at Robinhood, same thing. This nice big period of consolidation already filled that gap. And the 200 daily is moving upwards. You know, it's going to help support that stock price. This nice, let me just draw it out for you so you guys don't have to stare at my mouse. I like this orange line. You know, I haven't done that. I haven't used orange a whole lot on TradingView. That's pretty cool. But yeah, I mean, there's like this nice wedging pattern here. Nice low wedgie for Robinhood. You know, and this could possibly mean that a bigger move is coming. So it looks like it's been between 95 and 115. And like, I think higher is definitely more of the possibility, especially after this news in Venezuela, because, you know, now Robinhood crypto, you know, could possibly move into it. You know, obviously it's going to have competition, I believe so, from like Nubank, PayPal, obviously a big player in global payments. You know, I'm sure Visa is going to get in on it. I'm sure Visa already has somewhat of a business in Venezuela, but, you know, now I think the floodgates are going to open a little bit more. Take a look at Nike, though. Nike, nice big period of consolidation. If we go to the weekly, let me make this look a little bit better. It's one thing I like about TradingView. It's a little bit, I think Robinhood is simpler, but TradingView is just what I'm used to, and it just, I don't know, it's still a little bit, I don't know, more enjoyable to use, I guess I would say. But, you know, even though it's been on a downtrend, I think recently it's kind of somewhat of a consolidation pattern. And the news over the weekend didn't affect Nike too much. You know, it is green along with the rest of the market, but I don't think it's too much of a difference. American Express, let's take a look at that. Yeah, so I mean, American Express is just a clean, you know, upwards type of company. But definitely, I think fintech and crypto will benefit from this situation in Venezuela. But if we take a look at the photo that went viral over the weekend, it is Maduro rocking the full Nike tech in all of its glory. But I did have to buy that. So I will be using it in a future video for you guys, just to show off, and, you know, I gotta flex a little bit. But this is the Google Trends for Nike tech. And, you know, recently it did have like this upwards movement, right, even before this whole photo going viral. But, you know, Google is projecting Nike tech, the search, to go up exponentially, you know, probably because of this. But yeah, I mean, I think this is still, well, I didn't even like it, but I think, like I said, staying away from politics, I think this is overall a good thing for Nike. Obviously, he could have been wearing just any old t-shirt, right, any old pair of PJs, any old pair of athletic gear, but he decided to wear Nike. And Nike is what was in this photo that will go down in history, right? I mean, this, if you think about it, this photo will be in history books, right? And Nike will be in history books. I mean, it's already in history books, but you know what I mean. So, like, this is overall a good thing for Nike. It is a win. Stock isn't moving too much off of it, but it is what it is. If we go to Grok, last stock I did want to take a look at before doing this video was Sprouts. So Sprouts right now, I believe it's like $80 a share, but free cash flow per share is about $5. So, you know, that's pretty decently valued, and the 5-year average is $2.50. So they've doubled, almost doubled their free cash flow per share, right? And if they continue to do so, bringing that free cash flow per share up to $8, that is basically a 10% free cash flow yield at today's current prices, if I can speak. So It is a stock to keep in mind. I was buying Robinhood at a 10% free cash flow yield years ago. Revenue growth trend, very nice. This is a grocery company, by the way, guys. This is a grocery store growing at 10% revenue year over year. Tangible book value is looking nice, so their balance sheet is positive, right? $15 a share. Price to sales is 1.3. Return on capital 17% for a grocery company, right? 5-year share count trend is down, so they have been doing buybacks. This is according to Grok, right? But it looks like Grok has been using like Yahoo Finance, Seeking Alpha, etc. Short interest is about 10%, so it's not super low, but it's also decently high enough to cause somewhat of a volatility, I guess, in the market. Pepsi, by the way. I am a shameless walking advertisement. But yeah, that was the last stock that I was looking at. But this is kind of what I like to do whenever I'm looking at stocks. I just like to reuse my prompt. But let's see what it says for Nike as of today. And then I'll also do SoFi later on. But let's wait for Grok. So free cash flow per share is about 220. 5-year average was about 250, so kind of down, kind of stagnant. Hopefully that does turn back around with share buybacks and whatnot. But the 5-year revenue trend is only 2 to 4%, which is pretty disappointing, I will admit. Tangible book value per share is basically 8, between 8 and 9. So like I said, I would like for that to be a lot closer to the public share price right now, but it is what it is. A balance sheet is positive, which is a good thing. Price to sales is 2. Return on capital 13. The shares are going down. Short interest is 3.5. Nothing really to pay attention to, but Nike is one of those companies where I think you should at least well, not you, right? I shouldn't say that. I'm not giving financial advice here, but I just want to dip my toes a little bit into it, right? Have a position built up, and if it does go down even more, right, possibly snag some more. But let's see. We're going to do SoFi next because I do want to talk about SoFi later in this video. So while Grok is running, I'm just going to go with some other posts that I thought were interesting. This is from before the new year. But it is the biggest winners of 2025. We got Western Digital, Micron, Seagate. So a lot of hardware stocks, right? Companies that make parts for computers, right? The whole AI trend, right? Along with Palantir, of course, more on the software side. So definitely that, or Land Research. I overlooked that one. And even Newmont to an extent. This whole gold and silver rally, along with the AI trend, right? Computers, they need those minerals, right? Those elements. So Newmont is definitely up there too. So I did miss out, unfortunately, on these big winners right here. Seagate, man. Seagate and Western Digital, Micron. I should have seen it coming, but I did have a little bit of Warner Bros. Obviously most of this is just from Paramount, Netflix fighting over Warner. But it is good to see Warner on this list. Palantir, of course, one of my holdings. And then Robinhood, my number one winner that basically carried me. But let's look at this one. The S&P 500's biggest losers of 2025. So we got Trade Desk, Fiserv. Not going to lie to you guys, I'm not too familiar with these two. I know a lot of retail investors have been posting about them a little bit, but I'm not really, I don't know. Like when I buy a company, I like to think I'm buying a brand, I'm buying a business, I'm buying, an asset that's going to be stable and appreciate over time, right? And when I was buying Robinhood, I wasn't just buying it based on numbers and the chart. I was also buying it because I think Robinhood is a brand and a company that will still be around in the future, right? And it's a recognizable brand, and those tend to be a little bit easier to market. So, I'm not really interested too much. Maybe if I look into it a lot, but I'm not gonna lie to you guys, I'm not really that too deep into it. But we got Enphase, which I have heard about and have been considering, because they are a dominant player in the solar space. So I'm eyeing it, but I don't know if I'm gonna pull the trigger on that one. Lulu, of course, competitor to Nike. I know a lot of retail investors are into that one. But Alexandria Real Estate. So REITs, I've been looking at REITs a little bit because I think recently they have come down in price a lot. Uh, Now, ARE, I believe, correct me if I'm wrong, but I think they are more so like labs and like scientific, whatever, like basically like research labs that they rent out. So they own the real estate of that. I could be wrong, but that's just from what I've known in the past, what I read about. But I've been looking at like office REITs, apartment REITs, and office mostly for the turnaround and to convert into apartment REITs. And obviously, apartment REITs just because they're stable. They're at very low prices right now. I'm not expecting a crazy return, but I've just been eyeing them for a little bit of income. What else? Vici is another one, a popular one that gets thrown around. I'm looking at that one too. They own the prime real estate over in Vegas. But yeah, I think a lot of these themes here definitely could see a turnaround in 2026. Like Lulu, right? A lot of retail stocks, clothing stocks, and REITs I have been looking into. So it's just another post I wanted to share with you guys. But here is a post from SoFi Investor Relations. They did a new like equity deal, 1.57 billion, that they claim is going to be positive for their EPS, or neutral EPS. I'm sorry, I just saw that. But they claim it also will increase their tangible book value per share. So we're going to take a look at that on Grok. So as of right now, according to Grok, their free cash flow per share is negative. I thought it would be positive. I'm gonna have to take a look at that, like on Seeking Alpha or something. Now obviously 5-year average is gonna be negative, no dividend, of course. But the revenue trend is ridiculous, 32%. Tangible book value per share is $6. And that's where SoFi was trading not too long ago. Right, SoFi was $6, $7, $8 a share. So you could have been stacking it at tangible book value per share, according to Grok, at today's prices, or today's book value, and of course return on capital. They're still trying to turn around the company, but I don't know. Like SoFi, I made the right call going into Robinhood heavy, because I think the whole like anti-Robinhood sentiment from a while back, and they were piling it to SoFi, Charles Schwab, whatever. I thought all of that was overblown, and I turned out to be correct because I picked the winner. But I do have a little bit in SoFi because I do think they will still benefit, even though Robinhood has clearly taken a lot of that market share, and their market cap has gone up because of it tremendously. But SoFi is it's like one of those holdings for me where it's just in the middle. You know what I mean? It's not going to be my number one. Robinhood, Nike, right? Those top two positions. But it's also not going to be on the bottom, right? It's just kind of there, right? It's a bank of the future. They have their own stable coin now. They like to play it easy, right? They like to play it safe. Whereas Robinhood, they like to really push it and change the industry. They like to do things first. I'm not saying one is better than the other. You can still be a company that is not first, but still is the best, right? That's still important. But Robinhood has been fortunate enough to be somewhat the best, but also first, if that makes any sense. Like recently, I do think they've been cheaping out just slightly, right? Just from what I've seen with like their savings rates. I believe still SoFi savings rates is higher, but in the past, that was the opposite. Robinhood had extremely competitive savings rates. I want to say like number one. But recently, Probably because the rollout of gold cards and banking has been a little bit expensive. So right now they're just trying to help out with margins, of course. But yeah, I mean, it is what it is. I mean, Robinhood's still my number one position. Let's do Hood, just because we're on that topic, and then we'll do Circle. I mean, what's the ticker for Circle? Because it was also one that I was looking at, just from this whole Venezuela situation, right? Stable coins and whatnot, and it's also a beaten down dog right now. I think if the market does start tanking, the chart for Circle, I think the chart for Circle is going to look a lot worse if the market goes down even more. I mean, 300 all the way down to 69. That if it was a bear market, that would be 300 all the way down to like 30 right now, right? So it'd be like right here, I would think. Yeah, I don't know how to use Legend, to be honest, but it would be somewhere down here if we were in a bear market. But with this period of consolidation all the way back down IPO price and the recent situation, and global situation that we're in right now, I think stablecoins will play an important part. Fintechs in general, like Robinhood, like I said. So where is Grok right now? The ticker is CRCL. But according to Grok, Robinhood's free cash flow per share annual is 1.3. So that's like what, 1% free cash flow yield right now. So, it is pretty low. And if you look at it in those terms, Robinhood is pretty overvalued. But you look at the 5-year revenue trend, 49%, extremely impressive. Tangible book value per share, $9.50. Like I said, you could have been buying Robinhood at $9.50 a couple years ago. So it is a little while ago now, but could have been doing it. Return on capital, 10%. Share count is still going up even with all the buybacks, unfortunately. Short interest is 4.6. So it's not the most expensive company in the world, but it's also not the cheapest. So, but I'm still going to hold it. I think Robinhood will be one of those top 10 S&P 500 companies and one of those most influential companies in the world, right? A big player in finance, just like I made a video not too long ago talking about how fintechs are the new big banks, right? The old world was like JP Morgan Chase, Bank of America, like Charles Schwab, Morgan Stanley, like those types of institutions. And even though those institutions are still going to be in business, obviously, right? They're all going to be in crypto. They're all still going to be in business. They'll still have their high net worth clients. But I think companies like SoFi, Nubank, Robinhood, maybe even PayPal. I'm hoping for PayPal. But, these fintechs, I think they will be the big banks of the future. So hopefully, and American Express. American Express is a weird one because it was a part of the old world, but they've adapted and grown so much. It's also still new, right? It's one of those special companies. It's part of the old, right? The old finance industry, but it's also part of the new. So, I mean, when you find companies like that, it's very unique, and they're special. But what was it? CRCL. CRCL. Right? CRCL? Yeah. And currently it's about 85. So see, $85 a share for Circle. I need to do a little bit more research as to like their actual business. But free cash per share, it is positive, 1.61. 5-year revenue trend. Whoa. That's a wide margin, 15 to 88% year over year. So Grok might be messing up a little bit, or maybe that is like some years they were growing 15, other years they were growing 88. But tangible book value per share is positive, right? So Their balance sheet is positive. Return on capital is negative though, so I don't know about that. They could also easily turn that around. Share count trend is up, which I don't really like. Short interest, nothing really to pay attention to, 5%. But they are free cash flow positive, and they have a positive book value, so that is a good thing. So it's not dirt cheap, but it's back down at IPO price somewhat. So it's just one that I thought I'd keep an eye on. But what's another company we could do? Maybe PayPal, PYPL. But yeah, I mean, another company that I really want to be in my top three is American Express. Definitely, that is one I want. Free cash per share 6.5, so that's what, 10% right now, right? It's 10% yield, more than 10%. Free cash per share average is $5. Dividend per share, they do pay a dividend now. Revenue growth trend is up. Tangible book value is positive, right? And return on capital 21%. Share count is down. Short interest is barely 5%. PayPal is crazy because you look at these numbers and this is great, right? They're quote unquote cheap, but there's just no excitement for PayPal for some reason. I don't know what they need, to be honest. Like, I don't know. I honestly don't know what PayPal needs to get excitement, but maybe I like a Robinhood partnership, right? As of right now, I don't think PayUSD is available on the Robinhood platform, but I think some sort of a partnership might be interesting, right? Because if you think about it, PayPal isn't really known. It is a big player in crypto, kind of, right? They're a big player in global payments, so you would think that naturally would transition over into crypto, but I think partnerships with companies like Robinhood, Coinbase, if they haven't done so already, I think that would be pretty interesting, like Nubank, etc. So maybe partnering with new and exciting companies is the way to go for PayPal, but it is what it is. Just out of curiosity, I'm just going to throw out another stock that I've been holding onto a little bit. I have a very tiny position in Kava, but we'll just go ahead and do that. Just so you guys can see kind of like my process of brainstorming, right? I used to have to spend so much time digging through Seeking Alpha, Yahoo Finance, and I still use Seeking Alpha and those types of websites to an extent, but this is like so fast, right? I just type in a ticker on a prompt I already made, and then boom, it gets me like rough numbers that are close to being accurate or just completely accurate. But Kava, free cash flow is positive. It's not a 10% free cash flow yield, but it is positive. Revenue trend 30%, very impressive. Tangible book value per share $6, so it's positive. It's not trading at $6 a share right now, but their balance sheet is positive. Price to sales 9.5, return on capital 18%, impressive. They need to start buying back shares. I do think that, right, especially if they're free cash flow positive. Definitely buy down those shares and also expand a little bit faster. I would like to see a lot more Kavas in my area. I think there's only like a couple Kavas, and they're like super far away from me. So, I think a little bit more Kavas would not be the worst idea. Short interest is 13% though, so volatility is definitely there for traders. But let's look at Chipotle just for some comparison. But yeah, guys, one of my hopes in the future is to kind of turn this into like a live stream where I kind of like go over news, like react to videos, do this with you guys, these types of things, going over charts, maybe companies that you guys request. Zeta is another one I've been seeing kind of on X, but free cash per share for CMG is 113, so they're positive, of course. That's about almost 5% free cash flow yield. So it's not the best, it's not the worst, it's just there. Revenue trend still impressive. Tangible book value per share is negative or low according to Grok. But as long as their balance sheet is good, I'm good. But if their free cash flow per share is positive, Chipotle could look into doing a dividend. I don't know if they would want to. I know I would like it, but return on capital 15%. They have been buying back stocks. Short interest is 2%. Wow, really low. So I guess people don't think there's a whole lot of downside left in Chipotle, but that is interesting. I guess we'll do Zeta. I think this is one that a lot of people on X have been talking about. So, but yeah, my plans are to kind of turn this into a live stream sort of thing. They're free cash flow positive, right? 50 cents. It's not the best. It's not the worst. Let's see what Zeta. Is this the right one? Yeah, I think so. Zeta $21. So, that's a 2.5% free cash flow yield. So, but revenue trend is very good. Tangible book value is positive, so balance sheet is positive. Short interest is only 9%. Interesting. So positive balance sheet, free cash flow positive, but I don't know. I don't know a whole lot about Zeta. I just see it trending, so I just decided to give it a shot. Let's do Meta. Zeta Meta. $17 a share free cash flow. So they could up that dividend by a lot, especially because they're buying back a lot of stock. 22% return on capital, 5-year revenue trend about 20% annual growth rate. Tangible book value per share is in the 70s, so positive balance sheet. Short interest is only 1%. That's crazy. Yeah, there you go. Meta. What is Meta trading at right now? Meta. Oh man, look at that gap. 740. Yeah. There's also a gap down here, another gap down here. So I don't know. Meta could possibly be sideways for a little bit, especially if we have a correction towards 2027. But yeah, 650. So that's a pretty low free cash flow yield, but it's Meta. It's one of the big dogs. So another post that I kind of wanted to go over, just because I think it's important to also pay attention to bullish posts, because there's a ton of people on social media posting doom and gloom, and even myself recently, especially with the market going up so much, I'm like, yeah, 2026, 2027 might not be the best. But it's important to see stuff like this, right? Especially if you're bearish, it's important to see the bullish side. So this individual on X, I don't know him too well. I've just seen his posts on X, but his name's Ryan Dietrich. If anybody wants to give him a follow, he says the S&P 500 is up 132% past 6 years. Only 26% of that came from multiple expansion. The rest came from sales, margin growth, and dividends. This isn't a bubble. Is our take. It is a bull market being supported by the right things. So, he gives a fundamental argument for the bullish side. So, it is important to keep an eye on that. But last thing I wanted to go over before I closed this off was the community comments from you guys. So I believe we last left off on this silver comment, but we have 3K investment saying first. Okay. There's not a whole lot of people that watch my videos, so being first isn't as impressive, but I appreciate the comment. Adner. So Adner says, good stuff, dude. Showing people how to maintain their capital rather than straight options with zero risk management. I appreciate the kind words, sir, but or ma'am. But in all honesty, I think I could be doing a little bit better when it comes to risk management, just because Robinhood is basically half my net worth. It's a very volatile stock, so I could be a little bit more responsible with risk management. But you also, you could argue that my outperformance is because I got lucky on a very volatile stock that went up a lot, right? It's one of the biggest winners of 2025. So what we have yet that says, I appreciate the transparency, of course. Which stock made the most of the 125 gain? That is obviously Hood. We have A. Carl and OG of the channel saying, proud of you. Thanks for all the updates, even when you were way down. Of course, I'm always going to post updates, even if the market's down. And even times like right now where, views have been kind of stagnant because there's not a whole lot going on in the market. Crypto has been down and up, whatever. So it's been kind of sideways. The market has kind of been sideways. Stocks like Robinhood are down from their all-time highs. So there hasn't been a whole lot of reason, I guess, for people to search up stock market videos. So I've definitely noticed that, but it's slowly starting to pick back up, which is kind of weird. But it makes sense, right? When the market is sideways, views are kind of like sideways. When the market starts to pick back up a little bit, views tend to go up. And when the market is down, I think it's kind of a hit or miss. I'm still small, so sometimes I'll have small views, but sometimes that panic will also cause a view spike. So it is what it is, but I appreciate all you guys that comment. Like I said, my plan in the future is to turn this into more of a live stream so you guys can actually put up posts, and I'll react to your guys' comments rather than reading it off from previous comments. But yeah, that is my longer term, I guess, goal with all of this. If you guys have any other stocks to kind of have me go over, I will be looking into Circle after this video. Definitely going to be looking into Circle, see if that's the right move for stable coins, because we got a lot of players now. Obviously we have Robinhood that's deep in crypto right now. We have PayPal with their stable coin. We have SoFi with their stable coin. Got a lot of big players coming in. I don't know if Nubank has a stable coin, but I wouldn't be surprised if they do. So it's an exciting time to be in fintech and crypto. I'm definitely going to be looking into Circle. I don't know about Coinbase, because it kind of seems like Coinbase is copying Robinhood a little bit, because they recently announced stock trading, I think, like the stock trading but on the blockchain, right? Which is what Robinhood had already announced, and they're working on it, and I believe they already have it in Europe. So that's pretty cool. But yeah, I mean, Coinbase will be one of those companies, right? Like I said, I think the future of fintechs is like that big bank role, where the fintechs, they'll kind of copy each other, and there'll be a lot of hegemony. I mean, I don't know big words, but kind of like how right now, Chase, Bank of America, Wells Fargo, Citi, right? They have differences, but they kind of offer the same thing. They all offer a very low interest savings account. They all have some sort of a wealth management thing for their older clients, their high net worth clients. They have some credit cards that some of them are very competitive, some of them are kind of basic, but there's not a whole lot of differences, right? If you have a Chase account, maybe you prefer that over a Bank of America account, but at the same time, it's not too different. You know what I mean? So I think in the future, in the far future, fintechs will kind of play that role, where whether you have Coinbase or Robinhood, there'll be differences definitely, but they are they still offer similar things, if that makes sense, right? You'll somewhat be able to trade stocks on Coinbase, but that'll be Robinhood's thing, right? And both platforms offer crypto, but maybe you prefer Coinbase a little bit more, and there's not going to be a whole lot of differentiating, I guess, aspects about them, unless Robinhood just keeps on innovating and differentiates themselves from everybody else. They will definitely be one of those top tier companies like American Express, right? American Express has adapted all throughout history, right? American Express was a part of that old finance world, but they made sure to not be like every other big bank, right? They are very different, right? They have their own credit card network. They have checkings and savings accounts, but it's a high yield savings account, right? And I think I could be wrong. I don't use it personally, but I'm pretty sure their debit card and checking account, you can earn rewards on there. Their Amex points, right? And Amex points are very valuable. They made sure that. They made sure their brand is very valuable. They made sure to keep up to date with what the each new younger generation wants, right? So like travel, that's always going to be something that younger people want, right? And older people, but specifically younger people, that's what they aspire to be. And they make sure that with each generation that passes, they value that platinum card, right? When someone sees American Express, they think high value. And with each generation that passes, they make sure that that image is instilled, right? So it's that very special company, and they're still innovating and improving, right? Their user experience, it doesn't feel like an old bank, right? I would say their user experience is up there with like Robinhood. But yeah, I think, but the future of fintech is going to be like that big bank role, right? That's why I kind of worry about SoFi, because I really want SoFi to differentiate themselves early on, because it's going to get even harder over time, right? Like Robinhood differentiated themselves and they were a pioneer from the start. So, they just have to keep that momentum going. Whereas SoFi, it seems like they have one foot here and then another one here, right? But I still think SoFi will be successful, just like I still think PayPal will be around, 10 years from now. It's just which stock is going to be the biggest winner, right? But man, I wish I had a lot more Nubank. But I think Brazil. Oh, that's another thing. I guess I could go over EWZ. So the Brazil fund has been consolidating for a very long time now, but it seems like we possibly could be breaking out, especially with this recent news. Man, I hate how I'm just gonna go on TradingView, honestly, so I can show you all this. But so this is the monthly chart. As you can see, Brazil, the Brazil ETF in America has been consolidating for a very long time. We've been at these prices for what? This is 2008, 2005, so 20 years. 20 years it's been at these levels. Dividend is 5%, so you're like not really keeping up with inflation, but somewhat. But Brazil is one that could possibly benefit tremendously from this Venezuela situation, but maybe not. Maybe not. The reason why I say that is because if our involvement in Venezuela ends up benefiting them tremendously to where Venezuela is like top dog in the region, even though Brazil geographically is the biggest, if I'm not mistaken, and they definitely have a lot of influence, Venezuela could still play a very big role, right? And basically eat up market share, if that makes any sense. If we're thinking of it in terms of two companies, right? Like Venezuela's ride up could take away from Brazil a little bit, or they could, rising tide lifts both boats, but possibly Brazil could benefit from the Venezuela situation, whether it's more stability, right? More stability in that region would bring more investor confidence in the region, right? So people are more willing to invest in South America, which obviously would benefit Nubank, Brazil, etc. But It's another, I guess, theme that I've been seeing on X. And I wish I was buying at these crazy low levels, right? Like $23. Well, I don't know what that dividend yield would be, but it'd be pushing like what, 8%, 7-8% dividend yield down here. You know, if you were scooping it up. But man, yeah, man, that just goes to show you there's tons of opportunities in the market. You don't have to just chase tech stocks. You don't have to just chase whatever the new thing is. You can still make decent money in quote unquote safer things like funds. But obviously you got to have the timing for it. You know, nobody could have predicted that this was literally the bottom of the Brazil ETF, right? And you would lock in that crazy high yield, but it is what it is. Let's do Costco actually. I just saw that Costco. Costco free cash flow per share 17, averages around like 13, 15, dividend per share 5. So they can still grow that dividend. Revenue trend still double digits. Tangible book value 65. So that's definitely not close. Return on capital is 20% though, which is crazy, right? For a low margin business, it's crazy. Short interest is 1%. So, you know, people that are shorting the market aren't seeing too much downside in Costco, it seems like. So maybe I'll buy some Costco. I don't know. I only have like 0.5 something, like a fractional share of it. Let's go back to Sprouts Farmers Market. So that free cash flow per share yield, right, on Costco was kind of low. But yeah, I mean, Sprouts is so Sprouts right now, it's at the 200 weekly moving average, so that will play a lot of support here, close to that 50 monthly, right? Look at this huge gap here, man. $100 a share price target for myself, right? I'm thinking Sprouts will at least fill up this gap. So $100 a share for Sprouts. And if we look at my own personal indicator, it's looking like a crossover here at like very high time frame support levels. So an all-time high was 180. So, and it's cheaper on paper. It's cheaper than Costco on paper. So definitely I think I'll be putting a little bit more into Sprouts than Costco. But man, I mean, like I said, there's tons of opportunity in the market. You know, you don't have to just chase tech stocks and whatnot. You don't have to just chase Bitcoin and crypto. But yeah, guys, hopefully this was somewhat informative for you guys. It's episode 2 of the overnight sessions.